Thank you, Danny. Just switch screens again and back on. I'm on the YM at the moment, and this is the workspace. I've got multiple Renkos and multiple time-based charts, and it's just it's a powerful combination. As Anna said, using Renko with time, it gives you the balance of a time-based chart with the application of volume price analysis, but with a non-time-based chart, you get the sense of momentum, which you don't see. You see it with Renko and you see it with tick charts because they're independent of time. And this is just a great development, if you like, of how to use it in a multiple way. So in exactly the same way as we use multiple time frames, I've got down here, I've got the 15, these are pretty quick, 15 second, 30 second, and I've got the 1 minute here. And up on the top line, I've got 3 Renkos. And this is the Renko optimizer, and it's set to the same time frame as below. So basically what we do is we just go in here and select 15 second, click on that, and then it delivers the optimal brick size for this particular instrument, this particular time in the session. We just click on that, and that's going to pull up the associated optimal Renko. And at the moment, that is running on 8. In other words, 8 points, which is $5 a point. I'll leave you to do the maths. It's not a bad return for each of these bricks, but that's what we're doing. So we are basically allowing the indicator, or giving the indicator the opportunity to give us the optimal setting, because you've got to understand that in a session, markets speed up and slow down. They don't run at the same speed. If you're running on a tick chart, if you're trading tick charts, for example, and you decide that I'm going to trade the NQ or the ES, and I'm going to use 150 tick chart. Well, first of all, you're guessing, but secondly, more importantly, that changes throughout the session. It's not something that's static. The markets speed up and slow down the whole time. And what that means is that the tick chart has to reflect that, as does the Renko. So these will change throughout the session. It doesn't mean that it's going to be a fixed 8 points for the rest of the session. We will come back and check it, maybe every sort of 5 or 10 minutes if we're on very fast time frames like these. If they're slightly slower, you can allow them to run a little bit longer. This is on the 30 seconds, so it reflects the one below. We just click on the 30 second, and that will then deliver the optimal brick size, which is here, so that is 12. So we just click on that. Now we're running on this, which is a slightly slower time frame. We're running on 12 point brick size. And then finally over to the 1 minute, do the same thing. We'll click on that for the 1 minute, just see what speed we're running here. Allow that to settle. Okay, and we've got 18 there. So we pop that in. And as a rule of thumb, the slower the time frame you select, the larger will be the optimal brick size that is delivered. Now, in addition to that, you can also set your own brick size if you wish. We would suggest that you're better off using the optimal one, because you're trading at the same speed as the market. You don't have to worry about guessing or anything else. You don't have to worry about what you're going to set, but it is in there anyway. And basically using it in exactly the same way as you would with multiple time frames. We're obviously looking here in terms of volume price analysis. So we're looking down here. Our eyeball is looking, our eyes are drawn to anomalies. You're looking at low volume, we look at high volume peaks. We had a hammer come down here. Good volume under that one. That was what, 5 minutes or so ago. Decent volume there, and on up we go. But then as we get up into the rally, look at the way the volume's curving lower. So we've got a curving higher price. We've got, but in addition to that, which is giving us a further clue, is these spreads are narrowing. So if you've got price rising on narrowing spread, that is a sign on price alone, if you will, that the market is looking a little bit weak. But when you align volume with it and you've got volume falling and you've got market rising, that's a sure sign that that market is weak and not going to go on very much further. It may well go into a pause point and pick up the tempo later on. But as a trader, what you're looking at all the time is, what is going to happen next? And if you see this developing and maybe you've jumped in, maybe you've got in on this signal, you thought, to hell with it, I'm going to jump in now. I'm going to scout this market, get in quick. And then as you see this developing, you're thinking, hang on a minute, this doesn't look very good. We've got rising price, falling volume. This doesn't look too strong to me. So, maybe I'm going to close out or part close, whatever it is. If I'm scaling out, I've got a handful of positions on or a handful of lots on, and I'm going to take a bunch off the table because this doesn't look very strong to me. It's all about that. And You know, in this case, it looks as though it's going to reverse back. It's gone down to the volume point of control, which is sat here. We've got some resistance, some support coming into play below, 6 or 7 points below here. That may well come into play shortly. We're now back at the volume point of control, so we're expecting the market to congest around this region for a period. Bear in mind, this is a 15-second chart, so you know we are talking pretty quick here. This is on to the 30, similar picture, and again, it just confirms the position. Remember what I said earlier? I said, you know, you do get V-shaped rallies. We had one signal, nice signal, lots of volume, bang, and it goes straight up. Well, you know, those come and go. They're not the norm. They do occur, as you see here. It's a nice example. It's just a V-shaped rally, comes down, bang, nice signal, bang, goes up the other way. This is a 30-second chart. It could be a 15-minute, could be 30-minute, could be whatever. So they happen. You let them go. You don't regret the decision. You just say, fine, okay, well, I'll wait for the next bunch of signals to come along, and on you go. This is now moving to downside. Let's just see if that level's been tested. Here it is over on 15 seconds. Pop that up. There we are, coming into play. Hit it, bounced off it. This is on the accumulation distribution. It's such a powerful indicator. What it does is it presents these levels in terms of their strength. So up here, we've got some very minor levels of price resistance. This has been tested once. This has been tested 3 times. You may not be able to see the little numbers alongside here, but it actually tells you how many times that's been tested and held. This is done a couple of times, but this guy down here is much stronger. This is 8. We're now breaking through. That is now going to obviously be a strong level of resistance if the market wants to rally against it. We've now breached it, and it's now acting as resistance. And that's on the accumulation distribution. It paints those levels for you automatically on NinjaTrader. Decent move to the downside. We have a lot of talking heads today, by the way. I'm just looking over on the other screens. We've got Fed Powell later in about, what did I say? Did I? Sorry. We've got Powell at 7:30 UK time, so it's roughly an hour and a half. We've got other people there. Clarida is at 6 o'clock, in fact, coming up now, any moment soon. So there's a lot of talking heads going on. So if you're trading these markets right now, you've got to be aware that there's going to be volatility all over the shop in the next couple of hours. We've already seen some of it. Also bear in mind that the European markets, I know it's less important now, but they have been on a bank holiday for today. So France and Germany have been on bank holiday, and as have Switzerland and Italy. Ascension Day today. Let's just go back onto the time-based charts. There we go. Now we're back on just purely time-based charts. This is, and here we're getting the volatility come in. Yeah, so we've got, never know how you pronounce it. Is it Clarida or Clarida? Clarida? Clarida. So Fed member Clarida. And we've had Williams earlier on. That was 3 o'clock. So there's a lot of, as I say, talking heads going on. And we're seeing the volatility, which is what we expect to see. Snap move up, trap move, more volatility, bang it down. Nice money-making operation, not for you, but for the big operators and the insiders and the market makers. Let's just go on to a slightly slower time frame. Actually, let's go up to the 5 minute. 5 minutes probably quite nice. There we go. Again, you know, it's support and resistance. Yes, it's about volume price analysis, but it's in addition. You know, you're bringing in support and resistance here. You've got 2 very strong levels here, a nice cluster of 2 here, so that's likely to come into play if we'd like to see a move to the downside. We're trading around the volume point of control, so for the time being, you know, we're not expecting anything particularly strong to develop. 1.5 tons of volume. Volume falls away once we get below this level, but we've got an awful lot of volume up here. So if we're going to break to the upside, you know, it's going to take some real effort to push through that lot. But we're expecting just the market to oscillate around, lots of trapping, lots of volatility. Just a great time to be a market maker or a big operator, just trapping everyone into these weak positions. Probably the same on all 3. Let's just have a quick look. This is the 3 of them, the 3 sisters. Basically, we've got the YM on the left, we've got the NQ in the middle, and we've got the ES over on the right-hand side. So that's on the 5 minute time frame across the top. And then down the bottom, we've got the daily charts, and this is the one that Anna was referencing earlier on. That's the, sorry, I beg your pardon, that's the ES. They're pretty similar, but this is the one. There we go, up onto the NQ, that one there. And that was the buying that came in earlier last week. They're all fairly similar in the sense that we've got the volume point of control is sharply in evidence on all those time frames. We've got a lot of resistance in overhead here, price-based resistance. We've got lots of volume building around this region. And, you know, this is going to oscillate here probably for the next hour and a half until we get Mr. Powell steps up to the plate and delivers. And will no doubt deliver yet more volatility. So it's not a particular time to be looking for trends right now. You might well want to jump in this as a scalping opportunity, but you certainly wouldn't want to stay in here for too long right now. Let's just go back onto this where we are, 15 seconds. When the markets are volatile like this, you have to go down to the really fast time frames if you want to trade. And you know, it's down sub-minute, you're down into these sorts of time frames. The trades are there. It may not suit your trading style. And if you're a little bit, if you're a novice, certainly don't. Even if some experienced traders don't like to go down to these sorts of time frames. But basically, the rule of thumb, if you like, is if the markets are in congestion and you feel the need to trade, or you have to trade, or you want to trade and you're scalping, then you're going to have to step down to faster trades to hop in and out pretty damn quick. These are not markets to hang around in because they're going to do this all the time now. But the trades are there. You know, that's 485 down to 460. That's 20 pips, 20 points. You know, 30 points. It's fine. It's worth having. But you may not be comfortable trading at that speed. And you've also got to be set up to trade at that speed. You've got to be automated in terms of your execution, in terms of your stop loss position and management. It's all got to be done literally at the click of a button, in, out, in, out. It's very much like trading off the order boards or trading order flow. It's exactly the same principles. You've got to be quick and sharp. You can't afford to hang around. You're not sitting here debating where shall I put my stop loss? Now let me have a look. It's not that, that doesn't apply to this sort of trading. What you're doing here is you're trading with a fixed stop loss. It's an automated process in that sense. It's basically how Anna and I started when we were trading FTSE futures 20 odd years ago. You go in with we had a 5-point stop loss. That was it. There was no debate about it. You just went in, got out again all the time, all day long. With that fixed stop loss in place, and it was all automated. Just picked up the phone. At that time, it was on the phone. It was a little bit slower, a lot slower than it would be today. So you picked up the phone, through the broker, give me buy, sell, whatever it was, fixed loss, bang, it was in. You heard it go live into the market, and you were in and out. And the same repeating for exiting the market closing position. Yeah. Just open up the chat box. Anna's just highlighted the questions coming in, Ezzy, on just keeping an eye on what's going on. You can see the 2-minute here, the volatility triggers come in. So expect a reversal or a congestion at any rate, which is what's happening over here, but confirmed on 2. So, you know, it's what you expect to see. In terms of, yeah, Ezzy, in terms of tick volume on interactive brokers, they do not deliver historic tick data. They hold the tick data, but they don't release it. It's an issue that we have been working on, but we can't find a workaround at the moment. So no, you won't find tick volume on interactive. You'll find it building in real time if you have a chart open, but you won't find it because they don't offer it as a historic database of information. So that's just a fact of life with interactive. Interactive is, you've got to remember really that interactive is a deep discount broker. They're not a data feed provider. So you just have to accept that fact, and the The way around it, partial way around it, is, as I say, first of all, to leave the charts running during the day, which, you know, you're not going to get great charting. Let's face it, the interactive platform for charting is not great. That's being polite. I think everyone recognizes that. But then, to be fair to interactive, they are not in the business of being they're not a charting application. They're not a data feed provider. They are a broker. And they know full well that most people will use another charting application for their analysis because they don't offer the tools and sophistication that you will need as a trader. The only work around it in terms of just using the interactive broker feed is, as I say, to have the faster charts open. It doesn't apply obviously to the slower charts because it just doesn't work. The alternative is obviously to trade futures where you will see live volume. They work perfectly fine, but of course they are slightly limited in terms of the spread of pairs. You've really got the majors there. So yeah, that's the issue with interactive and volume feed. So I hope that answers that one for you. We have in terms of what we're doing with TradeStation, we are basically developing two parallel platforms. The first is TradeStation Global, which is TradeStation driven by the interactive brokers feed, and that is on version 9.5. And version 10 is TradeStation Securities, which is the US version, if you like. So one is a relationship between interactive and TradeStation, which is 9.5, driven by the interactive brokers feed. So traders who have an interactive brokers account can trade through the TradeStation platform, but obviously volume is an issue on that particular scenario. But in terms of TradeStation 10, then you're running on the TradeStation data feed for that version and above, and in that case you will have volume on the TradeStation platform because TradeStation is a data provider as well as a brokerage and all the other things and a charting application. So I hope that answers that one for you. I'll switch myself off for a moment there, sorry about that. Yep. Yep. Do you want to pass back to you or?
Yeah, that'd be good. And then we'll wrap up.
Yeah. Just going to pass back to Anna. Very choppy, as you can see. As I said, this market is not going to go anywhere for the time being. There's going to be lots of volatility. We're trading around the volume point of control. You know, as I said there, just picked up before I answered that question of Ezzy's, we've got volatility trigger come in, lots of volume, expect the market to congest. We've got the volatility, we've got VPOC here, we've got support and resistance above and below, lots of levels here, lots of volume, lots of reasons to tell you that it is not a trading environment for anything other than very, very sharp scalping. Down off the 10-minute, exactly the same scenario, trading at the volume point of control. You know, not a lot going on. I'm just going to head off quickly, have a look at gold very quickly, then I'll pass back to Anna.
Anna, that's fine. Did you stop a second?
Yep.
Before you say that, the prices.
Yeah, just going to head over to gold. In fact, I think Anna was just going to pass back to me anyway. So let's just have a quick look at gold, see what's going on there. That's also in congestion for the time being. So there's a lot of market congestion going on. Again, you know, it's similar to silver. We had this price waterfall. We had volatility coming in. We had buying coming into this candle. The market's rallied, but it's only gone back as far as the volume point of control right now. And obviously part of that will be dependent on what Mr. Powell says later on in terms of what's going to happen to gold next, and also in terms of the what's going on in terms of the dollar. Just go and check out the currency indices. There we go. Let's see what's going on in terms of currencies per se. This is the yen. This is on 5 minutes, so this is fairly quick. This is on 5. This is the dollar at the top right. Down at the bottom, we've got the euro, and here we've got the British pound. And the yen is just starting to come off a little bit, maybe. And it's falling also with the dollar, which is coming off as well. So if the dollar's going to start turning, then you would expect all things being equal for commodities to start rallying a little bit. You can see the strength of the buying on the dollar here. And also it's been going up with the yen. They've really been following one another around pretty much for the last 3 or 4 hours or so, which is quite interesting in itself. And as I say, it's just starting to come off a little bit on the faster time frames. So if that is starting to move, then what you would expect to see, all things being equal, is possibly a little bit of a rally to start to develop in terms of the indices. But I'm just looking over on the left-hand side to see what's going on in terms of the VIX. Just pull this across just before we wrap up. That's the VIX. This is the VIX on the daily, so this is where we are. It's in a pretty narrow range. The overall trend certainly, well, certainly in April, but into May, it's been a little bit. It's been rallying on a couple of days and then rolling over again. So there isn't a strong trend lower. The general, it's basically sliding lower rather than moving lower with any great momentum. Nevertheless, that is the general direction right now. But in terms of intraday, this is what we're seeing. We're seeing a lot of chop. The index is just chopping around in a fairly tight range. This is it on 5. And again, you can see it's moving in a tight range. So all the signals are, all the signs are that there is nothing going to develop particularly until the markets have heard from Mr. Powell, and then there will be volatility and possibly a breakout from congestion and a trend developing, and all of that will be confirmed in volume as it breaks away, as always. Just make sure there aren't any other questions. Hope that answered that one for you, as it. No, you're welcome. It's been an interesting exercise for us. It's taken a little bit longer than we anticipated, but we hope to have those 2 platforms up and running. That's TradeStation in the next couple of months or so, certainly in the next two months at the latest. So just slide that one out of the way. There we go. And there we are. It's just trading in a pretty narrow range, up and down, waiting for the speeches to come and go. And as that occurs, then you'll expect to see volume flatten. You expect to see price spreads narrow. You'll see bits of volatility in here, but basically the market is going to sit and wait until the next hour comes up, and then we'll see what happens. So there we are. That's us done. In terms of the indicators, you can find all the details here at quantumtrading.com. Currently available for MT4 and 5, NinjaTrader 7 or 8, and also for TradingView. We understand that there's a new upgrade to TradingView in terms of their programming language. There's a big new upgrade which came out a little while ago, and we are hopeful that we will be able to develop the rest of the indicators for the TradingView platform in due course. So that's the next thing we're going to be working on. But we'll post everything up in Quantum Labs as always. As I say, we've got TradeStation coming, which we're working on, and we'll get that wrapped up in the next few weeks as well. In terms of the education program, you can find all the details out here at quantumtradingeducation.com. It is comprehensive. We are very proud of it. It does come with a 7-day money-back guarantee, but we have yet to have any student who's joined this program to ask for a refund. So we are very proud of that fact, and we have a very supportive trader forum, private trader forum, which you can see up here, the trading floor, and Anna and I are there most days, and we are there to support students. It's a very supportive place, very friendly place, and we have some traders doing some great returns there as well. So it's a wonderful place. We're very proud of it. Finally, just over on Anna's site, if you're not familiar with Anna, you can find all the books here. They're all up on Amazon. You can find them in paperback or in Kindle. They are all there and available. So thank you very much indeed for coming along today. Hope you've enjoyed it. Hope you found the session useful. And enjoy the rest of the trading day. We are back on Tuesday next week for the London Forex session at 7:45 UK time. So we will see you there. Enjoy the rest of today and tomorrow, and have a good weekend, and hope that you're all staying safe and well in these difficult times, but just enjoy the trading. So thank you again, and we will speak soon. And if you have any questions, more than happy to answer them. Anna@annacooling.com or David@quantumtrading.com. See you soon, and bye for now.